And welcome to the OANDA MarketPulse charting analysis video. My name is Craig Erlam, Senior Market Analyst at OANDA. Now today, as always, we're going to take a look at around half a dozen charts which have had some interesting developments today. Shall we start with the DAX? Now, the DAX is one that we haven't actually seen a break per se today, but we are actually seeing potentially the early formation of what would be a bearish continuation pattern, which is something that's not completed yet because we have only had two touches on the upside and the downside. But I just wanted to highlight this nice and early. This is potentially looking like a rising wedge. It looks more clear on the daily chart, as a rising wedge, which tends to be a bearish pattern, whether in an uptrend or a downtrend. We're in a downtrend now, so in this case it is a continuation pattern. I'll be paying close attention to this because if we do see, I'm not saying this is necessarily 100% a wedge, so I'm not saying that this is bearish in itself, but if we see a break below that the support trend line, then that may suggest to me that we're going to see a push back towards these 9300 lows in the DAX. So I think this is more one just to monitor for now, given that this does appear to be moving in this kind of rising wedge formation. Clearly consolidation here. Don't appear to be seeing signs of a broader correction in the DAX. Let's move on to commodity. We've got copper here, and again, this is one we've highlighted previously, and I think we highlighted this in the video on Monday. We've had this consolidation continuing in copper for probably about a week and a half, 2 weeks now. We are pulling up towards through these fib levels, but it's the 61.8 fib level that really appeals to me here. Clearly we've got this downtrend, so which is why I've chosen the highs from the 30th of December down to the lows on the January the 18th. We're seeing consolidation in this in copper at the moment, but what interests me around this 61.8 fib level is the fact that we've got this you've got the resistance, the trendline resistance from this. From what could be potentially seen as a flag, or even if it's just a rising channel, that coincides with the 61.8 fib level that I've just highlighted, as well as this prior support, and it's around 206, so around one of those round numbers which I always highlight. I think this is going to be a really interesting level. What's more is we are starting to see what appears to be maybe a rising wedge here as well on the 4-hour chart. Now again, as I've just highlighted, a rising wedge rather than an uptrend or a downtrend tends to be a bearish formation. Even if it's not a rising wedge, even if those trend lines aren't legitimate, say it's a rising channel, these two tend to be quite often these bearish setups, especially if we start to see divergences forming at the same time. Now at the moment we are lacking these divergences at this stage. We're not exactly gaining momentum, potentially maybe in the moving averages on the MACD they appear to be, but the histogram and the stochastic aren't really seeing any momentum gains. We are currently seeing the 233 period simple moving average providing resistance, which it did on a number of occasions during the decline. The fact that we're approaching these levels around these 205 to 206, and we've got these this number of resistance levels, strikes me as potentially being quite bearish here. And if we do see a bearish move, then the next test for this would be around these 201.50s prior resistance. Well, really, you're looking at 205.50 to 201.50, which is this prior resistance from this period between January 19th and January 26th. Beyond here, we could potentially see this ascending, the lower bound of this rising channel or flag being tested. But at the moment, we are potentially, and I stress potentially, seeing signs of some form of topping in copper. Moving on to the currencies, we'll start with let's start with cable. And again, we are seeing cable rising over the past week or so, but what I just find interesting is we're not really seeing much pressure to the upside. It does tend to be a very gradual rise, which usually strikes me as being more bearish than bullish, if I'm perfectly honest. But once again, if we take a look at the 4-hour chart, you can see that we've potentially got this rising wedge formation. Now we've only got 2 touches on the lower bound of this and just short of 3 touches on the upper bound, but on top of all of this, we also have this previous area of support, which quite often can turn resistance, and you can also see signs of this to 143.50 providing resistance along the way. Now we've also got this moving average, although I haven't checked to see just how significant a moving average has been in the past. It doesn't look too great. This is the 89 period simple moving average, so maybe not paying too much attention to that. The fact that it coincides with all these levels isn't going to exactly do it any harm, if I'm honest, but it'll be very interesting to see how we react off of this, see if we see more pressure on this wedge wedge support, or if maybe this is just consolidation as part of a move through the upper trendline resistance here. I think this could just be into this. I just feel this may be some form of significant resistance here, which may prompt a move back to the downside. And if we see this resistance broken, then I would potentially expect to see these prior lows from January 21st come under pressure. Of course, with potential support being found along the way around these 140, 170 levels. Sticking with the pound, let's move to pound yen. And again, we're seeing pretty similar setups here. Now, the difference with sterling yen is, in the longer term, I remain bearish on here because of this head and shoulders, or variation of a head and shoulders, which I've highlighted previously. I think the conservative price projection for this head and shoulders, based on the move from the shoulder to the neckline, projected lower again, is around these 160.50 levels, which coincides with these previous levels of resistance. We haven't reached this level yet. The more aggressive target from the head to the neckline, projected lower again, is around these 150.275s, but we're nowhere near this yet. But the fact that we haven't even reached the conservative projection, and we're seeing what appears to be this rising wedge once again, suggests to me that maybe we are going to see a bit more pressure to the downside, although there's no guarantee when exactly that will come. What I find interesting here is we do have this 100 period simple moving average on the 4-hour chart. You can see that it provided support during this phase here, but during this decline it appears to have offered some form of resistance along the way down, including over the past couple of days. If we do see that continue to provide resistance and drag the price below this rising wedge formation, then again, once again, I'd initially be looking at 164 to be the potential level that we see this pair move to, with of course support potentially being found along the way around these 167s. But really I want to see the break of that rising wedge before I come too bearish. There's no reason to suggest at this stage at least that we're not going to see a broader correction here beyond what we have seen back towards 170, although 170 would be a logical level of resistance for this pair. It would be a logical level or a profit taking level for sterling yen longs, and it'd also potentially be a logical level for anyone looking to re-enter, for bearish traders looking to re-enter, just because as I always stress, these round numbers do tend to be quite logical, especially when they've been price support as well. So again, we could be seeing sterling yen trading at quite a crucial level right now. Euro yen, on the other hand, we have seen it break above that descending channel which I highlighted previously. Now I'm just going to tidy this up. I don't like too many lines on this chart, so I'm just going to get rid of the fib line, get rid of a few levels which I'm not really paying too much close attention to, which just leaves us with a nice fib. Now, I've highlighted this fib before. We highlighted the descending channel as a potential signal that this pair may be bottoming, because we had this descending channel as well as falling momentum on both the stochastic and the MACD. You can see this more clearly again on the 4-hour chart. So you had these lows being made, but the lows were not matched on the stochastic and the MACD as they were in the price action, and the fact that you've got this descending channel does tend to be quite bullish. Now we've seen a break above that descending channel, so now we're moving back towards these 120. We've run into some resistance just above 129, but I think the next logical area of resistance is around these 129.70s, maybe even as high as 130. Now this falls around the 38.2 and 50% Fibonacci retracement of the move from the 4th of December highs to the 21st of January lows. It also coincides with these previous lows from the end of November, so again a nice logical resistance level, being round number, price support, and around some key fib levels, but also potentially, if this market is remaining quite bearish when we meet and we've seen traders potentially taking profit around these levels, then this could be potentially an area where some sellers may look to re-enter. So it'll be interesting to see how price action reacts between 129.50 and 130 if we do see it reach these levels, of course, in the coming days. Let's finish off with dollar CAD, because we are approaching this 140 level. Now what I wanted to highlight here is we do seem to have held up just above here, actually around 140.40, and what I wanted to stress with this is technical analysis isn't an exact science. What we're looking for is key levels or key areas where we may see the market running support or resistance, and the more indicators we can find to support this, then the more chance that you tend to see of an instrument reversing at this level, or a break through that level being more significant. Now what we've highlighted here previously is 140 140 is a nice round number. It's a prior level of resistance. It coincides with the 38.2 Fibonacci retracement of the move from October 15th lows to January 20th highs. Now, we do appear to have run into support just above here around 140.40. Now, just because this is 40 pips above it doesn't mean I'm therefore just going to ignore it, because what we do appear to have is a potential bottoming pattern forming. You can actually see this even more clearly on the 1 hour chart. You kind of have this double bottom pattern forming, and the fact that we've found solid support around these 140.40 levels makes me think that we may not see this last 40 pips. Again, I'm not necessarily convinced by this at this stage, but we are seeing this divergence kind of form potentially across both the MACD and the stochastic. You can see that we haven't necessarily we've only made lower lows by a pip or two, but the fact that we've come back towards these levels and yet there's been zero momentum on the downside momentum on the MACD histogram, we've got potential divergence forming on the moving averages on the MACD and on the stochastic, suggests to me that we are this move back towards 140 is finally running out of steam. Now, what I'm looking for really in the early stages is a move through these 140, 150s, 140, 155 if you will, prior level of resistance when we had this consolidation after we hit the lows back on 26th of Jan. It's also prior support as well. If we can see a move back above these, then that may suggest that this pair has bottomed out, and maybe we are going to see a bit of a move to the upside. Beyond here, we could see a move back through towards these 143s, which was resistance back on January 26th and January 25th as well. So potentially some bullish price action to return to this dollar CAD pair in the short term. But again, as I keep stressing in previous videos, dollar CAD right now is primarily being driven by what's happening in the oil market, as are many other markets. We're seeing the same with the indices as well. We're seeing the same with other commodity currencies. So if you're trading dollar CAD, it's very much worth keeping an eye on the movements in the oil markets as well, because there's strong correlations. If oil moves significantly higher, then the chances are that dollar CAD is going to, I say the chances are, from what we've seen recently, if oil moves higher, we've seen the Canadian dollar strengthening and therefore dollar CAD moving lower, and vice versa. So it's worth being aware of these correlations and then using that knowledge to your advantage. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.